This is your investment update for June 2018. Summer months are generally kind of quieter in the markets, lots of vacation, and people aren't really paying attention. And that kind of played out this month, although it was volatile day to day, which we'll get into in a minute. But for the month, the S&P 500 domestic markets were up about 0.6%. And that was really about it. Our bond market was down 0.1%, so nothing really happening there. This was another month where our markets outperformed international markets, so the MSCI World Index was down 0.6% during the month, and their bond markets were down 0.4%. So that seems to be a trend that's kind of moving back in favor of domestic markets, whereas last year, international outperformed most of the time. Day to day, the market's moving around a lot, even though it's kind of running really fast to stay in place at the end of the month when you look at it. And what's really driving that is a lot of chatter between our government and our president and China about trade negotiations and a potential trade war. It's really hard to kind of decipher what the future is going to be like, because there's a lot of talk and a lot of it's posturing, it seems. But what that does anytime you have anything like that is it determines the directionality of the US dollar for a short-term time period. And in recent years, our markets have behaved the best when we've had a gradually weakening US dollar. That obviously helps stocks and asset prices, but what it also does is it really helps the European Central Bank in particular and China manage their own central bank policies. So when they know the dollar is going to gradually weaken, they're able to do things because everything's kind of tied to the US dollar and we're on a fiat-based system. Whenever you introduce something like a trade war into the mix and how that might affect global trade, you potentially get a strong dollar for a short period of time, and that kind of causes them to have to scramble to do some different things, and it causes markets to get really volatile really fast. So hopefully we'll get some clarity on that going forward, but that seems to be kind of the predominant trend in the market right now, is how is all of this talk and what are the policies actually going to look like, and what is that going to do to global trade, and how's that going to affect the global economy. And hopefully we'll get some clarity on that, and once the market digests it, we can kind of get back to business as usual. The Fed did raise rates again during the month, so the target rate's now at 2%. And as our new Fed chairman has made it very clear, he's going to continue to want to raise rates, and he says he's going to do it 2 more times this year. We should believe him at this point because he's done what he said every step of the way, and we do have the economic data that supports 2 more raises, so we would look for another one in the September timeframe and another one at the end of the year. As for that, those are the things we're watching right now. Summer is usually pretty quiet, so we'll continue to just monitor the markets and see what happens in July.